Look at this. This is the S&P 500 options chain for today. So open interest is the number of calls on the call side, the number of calls that were already established prior to this morning. So that locks in about 9:40 or so, sometime in the morning it locks. That's open. What's open at the time that they look at it, right? This under volume, that's what came in today. See the big fat number? Woo! 525,000 call options. So if you know that an option, 525, we'll just go 1,000. Oh, get rid of the comma. 520,000 options contracts. You know that each options contract represents 100 shares, right? Now put your commas in. $52 million represented of the S&P 500 just here. Look at the number, 670. If I look at the put side, on the downward side, look at the big fat round number, and I'm going to find one, and I found one right here. 350,000. You got 50,000, 22, 30, 71, 100, 94, 130, 347. These are under 200. There's a bigger one here. It's between 664 and 665. Boom. Look at this. Big one, 400,000 puts. So what that does is that draws the market maker, and when they start to see the calls being closed, they turn their attention to puts and they start hedging by selling the stock and raising cash until these numbers start to pump. So if look, 665, 660 here on the puts to the downside, 665 pretty significant on the put side. Once price went up, it needed to come up here and touch just to satisfy, just to make sure they have enough. Then they look at the volume coming over here, and then they start sending it down. They send it down to here, and then once they send it down to here, because the 665s, now listen to this part. Okay, this is the end. Look at the biggest number here. The biggest number here is right there, 665. So remember the chart? Boom, boom. It landed around here about 665, right? Puts. And then price went down to 660. Right. When price went down to 660, that's when these started to get loaded up, all the way down to here. And what you can also see, sort of happening in real time, is that the first move was up to 670, but then they started seeing the 665s show up. Then they saw the 660s, so they dropped it. This is 665. Sorry, 5. They dropped it down to 660, and now they've wiped out all these calls. These calls are toast. Anybody who bought, think about it. If you bought a 670 call today and price came down to 660, what are you going to do with your calls? You're going to hold them to the end of the day? Oh, maybe it'll come back $10. I don't think so. You're going to start closing them. The 615, all these calls, all the out of the money calls. Done, done, closing it, closing it, closing it. And as that happens, the market maker turns its attention over here to the put side. Drop it down to here. And then it starts to fall. Why does it fall? Because like a magnet, the 660s start showing up like crazy. So the market maker has to hedge and dumps even more stock. So it touches 660, goes a little below. But and then the 665s are now deep in the money. Do you think if it was you, what would you want to do with these puts? You don't have to worry about buying stock because the call buyers are toast. So that's when the market maker starts buying in the afternoon when price was down at 660. Why? To make sure that these suckers don't get paid. So let me draw it for you. This is where the out of the money calls happened. Market maker capitulates and buys like crazy, right? Then they start to see the 665s show up and even some action here at 660. The market maker has to hedge. So they start to dump. Down it goes, down it goes, down it goes, down it goes. Well, that takes care of the call buyers. Call buyers are screwed, right? But now the volume here is starting to mount at 660. Market maker has to hedge. And so they start selling off the stock and down it goes. All the 665, 6, 7, 8, 9 calls toast. But there's a tremendous number of puts that they have to make sure don't get in the money. So the market maker at the end of the day, why would price go like this at the end of the day? So that the 660s, 661s, 662 puts, 663 puts, so they won't get paid. The market maker swings the other way and throws it up this way. Then there's 665. All this more calls show up. 664, 56, because think about it. If you're day trading, you're thinking, well, shit, look at this. I'm going to start buying calls again towards the end of the day because look what's happening. The market maker is pushing it up. I'm going to buy more calls. So what does the market maker do? He sells it off at 3 o'clock. Boom, 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 boom. Except for one thing. He went a little too far. Why do I say that? Look at this wick. Is this wick below 665? Well, what's he going to do with the 350,000 puts at 665? So I want you to look at what happens in the last 6 minutes of the day, 4 or 5 minutes of the day. You tell me this isn't a manipulated market? You think this is about China or Trump or Biden or anybody else? Look at this. Bang. Look. This is a 1 minute candle. 1, 2, 3, 4, 5. And where did price finish? 665.17. That means the 665 puts are out of the money. And so are the 66s and 67s. Toast. Equal opportunity dream killer, someone once said. Killed the calls and puts. Came down here to really scare out the calls, but went a little too far. Oop, bought it up just to make sure those puts don't get paid. It's just unbelievable. Unbelievable. And this happens every day. Maybe not to this extreme, but this is what moves the markets. And so some have asked, where's all the trade alerts? Oh, Michael's traveling, so he's not trading. Baloney. I trade on the plane. I trade when I'm rehearsing. I got my phone open all the time. If there's opportunity, I will trade. I don't gamble. And if I look at the last couple of days here, let me just put a 15-minute chart, and then we'll move on to a different conversation. But I mean, look at this. All right, bit of a topping pattern. We got that big move down. Now, this is where we made a lot of money because we were anticipating it. Then it gaps up. And what I said to you on Saturday, before Monday, I said the markets are going to probably bounce. When they do, it will remain to be seen whether that bounce turns into a full-blown, oops, sorry, we're just going to keep rallying, that was no big deal, or do you just get a dead cat bounce where it bounces and then falls again? Well, when you look at Monday's price action, it bounced and then it didn't really go anywhere. So what do I do? Do I go long here? Should I go long there? Anybody? Anybody want me to make that decision back then? Let's buy some whatever. Microsoft, Tesla, Bank of America, whatever. No. Let's see what's going to happen. This was a significant drop, guys. This was huge. This was over 20 points. It's over a 20-point move from what? The height of 675 down to 655 or whatever. This is big. So now you jump up like this, and I'm like, okay, Michael, what are we going to do? We ain't doing nothing. So I said, you're either going to correct or and recover, or it's going to go back to, sell off. So we open with a gap down, but let's wait. And sure enough, what do we get? We get the 10 o'clock reversal. So it starts to move up. If you get rejected at the 50 and then it goes lower, then we can short some more. But it didn't. It went higher. But I didn't believe it because I don't believe this. I don't think investors think we're out of the woods. We still have a shutdown. We still have no data. We still don't really know what the Fed is going to do. We still don't know if we're going to tariff China at 145%, which I believe we should. I think we should tariff them at 200%. Take the heat on our side, but I think we should tariff them at 200%. Don't fuck with us. Enough is enough. And that's the only thing they will respond to. And trust me, they can't afford a 200% tariff. We can. We may not like it. Some of our products will go up. Amazon will blow up. Who cares? But you got to do it. You got to do it for the safety and economic health of your country. You can't let other countries take advantage the way they do and the way they manipulate their currency.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.